Hey, Lorne Andrews here from Dominion Lending Center's Expert Financial, OptimalFinance.ca. So the federal government has come up with a budget for 2022, and I would like to just kind of skim through very surface level some of the main features that would affect housing, okay, and how it could potentially affect you. First item up the bat, we're going to talk about the tax-free home savings account. So this one's actually pretty cool. This actually takes an RSP and a TFSA, kind of combines them all into one. It allows you to deposit money into this account up to $40,000 tax-free and withdraw it tax-free. It kind of serves almost like an RSP, and your contributions are non-taxable. Withdrawals to purchase the first home, including investment income, would not be taxable, just like a TFSA. Not going to make a huge difference in terms of housing and everything else, but a really cool vehicle for people to save above and beyond what the RSPs have to offer as well if you're a first-time home buyer. Next one we're going to talk about is the New Housing Acceleration Fund. They have a target of creating 100,000 new housing units over 5 years. It proposes about $4 billion over 5 years, starting in 22 to 23. This fund is supposed to be flexible and help some of the needs of the communities while speeding up the housing development. But 100,000 homes over, looking across the entire country, really a very small splash in a big pond. New affordable housing. To ensure affordable housing can be built quickly, the budget in 22 proposes $1.5 billion over 2 years, starting from 22 to 23, to extend rapid housing initiative. This new housing fund is expected to create at least 6,000 new affordable housing units, with at least 25% of the funding going towards women-focused housing projects. A lot of these challenges that they're going to have, that the federal government has, is not always the federal government decisions, and they can throw whatever money they have on it. But when it gets down to the federal, you got provincial, then you got municipal. Especially the municipal, they're the ones kind of dictating the demographics and the density within their communities. It's really going to come down to, you can throw as much money as you want at some of these projects, but you need the cooperation, and everything's got to fall in place through all levels of government. That's the biggest challenge with the housing. Next one I want to talk about is the extension of more flexible first-time home buyers incentive. So the government had come up with this incentive where they would do assisted down payment, 5% down, but there are a lot of restrictions on it. There's restrictions on the maximum amount of mortgage, the maximum amount of income. We were finding a lot of buyers were falling outside of that. So they plan on making some change and exploring changes to actually enhance that particular program, where the government would give the 5% down for resale homes or 10% down for new builds. Okay, you just had your 5%. That program, we're going to wait and see what revamps they have on that one. Another one that everybody's talking about is a ban on foreign investment. So the idea is proposed restrictions on banning foreign investors to buy non-recreational properties and residential property in Canada for a period of 2 years. Now, is this going to make a big difference? I'm not too sure, because you know what, there was already restrictions, there was taxes, and it was sort of causing people not to do this or wait because it just cost them more money just because of the taxation on it. So I don't see a huge difference in terms of what this will make. One part of the concern is this doesn't allow any foreign buyers. So anybody from the US can't buy a property in Canada. Potentially, there's the reciprocal situation where all of a sudden the US might say, oh, okay, since we can't buy properties over there, then maybe we'll cut it off. You snowbirds that are looking to buy properties in Florida, maybe we're going to cut that off too. So just got to kind of dance on that one, tread on it a little lightly. Is it going to make a big difference? I don't think so, because we already had those incentives in there to deter foreign investment. Next big one that came out was property flippers. They're going to pay their fair share. So basically what it's saying is if you own a property and you sell it within 12 months, it's going to be counted as business income and you're going to be taxed accordingly. What this does is it prevents people from quickly, flipping houses over a short period of time and trying to not pay the taxes on it. And I think with the government, when they were always saying if people have multiple houses, they would say, which is you have to declare one as your principal, and obviously the other one is investments. And so people would say, okay, no, I'm going to buy this one. That's now going to be my principal, and etc. Daisy chain. So I think what they did is they said, hey, listen, you know what? Let's make this simple, straight. 12 months. If you sell it within 12 months, you're going to be paying as business income. The other interesting caveat to this is people that are buying assignments. So if you buy an assignment, now you're going to be taxed by selling that assignment. So that is going to deter now. A lot of people buying on speculation, and it could really have, an effect too. So we'll see how that translates as well. But I thought that was fairly significant, and it's going to affect a lot of our investor side of things. Talk about rent-to-own projects. So basically, they're providing $200 million in dedicated support under the new existing Affordability Housing Innovation Fund. So this will include $100 million to support nonprofits, co-ops, developers, and rent-to-own companies building new rent-to-own units. It's something that they're trying to focus on more affordable housing. It's something, but again, it's that small splash in the big pond, but it is, again, something also needs to be coordinated with all levels of government. Another hot topic that they talked about was the Home Buyers Bill of Rights, bringing a national plan to end blind bidding. Among other things, Home Buyers Bill of Rights would include the legal right for a home inspection, ensuring transparency on the history of sales, etc. So a lot of that actually exists right now. I think with the challenge with the blind bidding, ending blind bidding, so if you could actually see what the bids are, I don't think there's anything wrong with that, but I think it has to be combined with something like cooling off period, right? Because just because you see a bid, you bid higher, but the bid below you just got accepted or whatnot, because maybe that bid just didn't have any conditions connected to it. You're not going to see that. So it's going to be confusing. I think if it combined it with that cooling off period where everybody kind of had like 5 days or 7 days to sort out everything, then that would make sense. But the other thing too is you have to remember, real estate is governed or managed provincially. Even nationally, the government come out with all these ideas, but provincially, each individual province regulates the real estate industry. So it's really up to the provincial's decisions to implement those changes. BC did implement the 5-day, I think it's 5-day or 7-day cooling off period for all real estate. So it gives you those 5 days to sort everything out and get everything in order and then follow through with the closing, which is not much different than previous when we had a more of a balanced market where you would put conditional on finance, conditional on status certificate, conditional on home inspection. Normal conditions that would be on almost every purchase you would see in a more balanced market. Another thing the government introduced was the multi-generational home renovation tax credit. So this is if I want to start doing some renovations to my home for a senior, they'll provide up to $7,500. So stuff, for example, if I want to build a senior suite, or some type of renovations for adults with disabilities starting in 2023, there is a $7,500 tax credit now available that will help subsidize that as well. The other one positive thing I thought was they're going to be doubling the first-time home buyers tax credit. So doubling the first-time home buyers tax credit to an amount of $10,000, and which provides up to another $1,500 of direct support for home buyers applying for homes purchased on or before January 1st, 2022. So what's the bottom line? So there's nothing really in the federal government that has done in the budget that just came out that will make much of a difference in the housing market. In fact, we've already seen the difference in the housing market sort of caused by a combination of one, spring, because now a lot more inventory coming into the market because of that spring market, combined with high interest rates. So interest rates starting to spike. We already have fixed mortgage rates on or above 4%. Variable rates have began to move, and they did a relatively large increase of 0.5% on the last meeting, and we're expected for them to have increases for the rest of the meetings, probably the end of the year. I mean, not always a half, might be just small portions of that, maybe 0.25%, etc., leading into next year as well. So I would expect those increases, those trends to increase. What I would have liked to see out of this particular budget is I would have liked them to have raised cap on insurable mortgages. So right now, an insured mortgage is up to $1 million. So up to $1 million, you can buy it with less than 20% down. You pay an insurance premium, and you can get into a home. The issue right now, especially with a lot of the bigger centers, a lot of these homes are peaking over $1 million. So as soon as I get to $1 million, you need a 20% down payment. I was really kind of hoping that they would actually give consideration to increase that to about $1.5 million. So you can actually now you can purchase amount over $1 million with less than 20% down. We'll wait and see. Maybe that will be coming down the road as a further revision, because it's getting harder and harder with the pricing where it is. Now, another thing I would love to see them do is bring back 30-year amortizations for insured mortgages. Hey, we had it before, it worked okay, let's bring it back. Even maybe it's just for first-time home buyers, right? That would be a great incentive or something to help them get into homes over maybe the repeat buyers. That would be interesting as well. And I think I really would have liked to have seen them maybe adopt the BC model where it's that cooling off period where kind of everybody's on that same playing field. I think that would have been really, really great, just to give everybody the equal time to make sure you got your financing and everything in order. So you're protecting your sellers and you're protecting your buyers all at the same time. But other than that, it is what it is. And this is what they came out with. They've already started to make some tweaks and things like that as well. But we'll, as these things roll out, I'll keep you updated. If you have any questions, any comments, please don't hesitate to put them down below. Looking forward to seeing you on the next video.